Welcome and good morning to our Bundesblock webinar today about optimization of sustainable energy assets. And I'm really pleased to cover this topic together with our experts on the panel. This webinar is recorded, so you can leave your camera on if you're here as a listener. If you don't want your face in the recording, please switch your camera off. We will also accept questions in the last 15 minutes of the webinar, so between 10 and 10:15. You can either raise your hand, then you can open your mic and ask them themselves, or if you're afraid that you might forget your questions, please type them in the chat window, then we can read it after the discussion comes to an end. We're happy to have you here. In case you have not heard about Bundesblock, that's the acronym or the nickname for the German Blockchain Association. So we are a members-led association that tries to advance the adoption of blockchain technology, not only in Germany, also in the neighboring countries and across Europe. Of course, since the financial market is leading, we cover a lot of financial industry topics over time. But we are very glad if we can talk about other things such as, digital identities or digital product passports, the use of blockchain for energy efficiency. And that's also, of course, the framing for this event today. My name is Sebastian Becker. I'm the managing director of the German Blockchain Association. And I'm really pleased to have you all here. So let's start with a quick round of introduction, starting with our guest from Vienna, Jürgen Eckel. Jürgen, please introduce yourself.
Hi, good morning. My name is Jürgen Eckel. I'm with Riddle Foundation and also working with Riddle and Code. I've been building hardware security and blockchain infrastructure for roughly the last 10 years. We started first with machine identity and trusted IoT devices and wanted to connect machines to the economy, and now have been moving deeper and deeper into the energy infrastructure. At Riddle and Code, we built Kern, an energy management platform deployed through utilities and partnerships. And Riddle Foundation actually provides a protocol layer, a hardware first DPIN, so decentralized physical infrastructure network that turns energy production and utilization, storage and flexibility into verifiable on-chain records. Think just of this as some energy hardware wallets. Right?
Thank you. Okay, Jürgen, we will hear more about the work of Riddle. Let's continue with Michael.
Thank you so much. Thanks for having me. I'm excited about the discussion today. So my name is Michael Stephan. I'm a lawyer and an engineer. I've been for more than 2 decades with a big French and Belgium energy company. And I see some former colleagues here as well. Welcome. Long time no see. I'm passionate about the energy transition, and I love to support the energy transition with my companies. And I'm glad to have the chance to talk about that later on in detail.
Thanks, Michael. Over to Nimrod, one of your business partners.
Yeah, thanks, Sebastian. Great being here. Thank you, everybody, for joining. So I'm Nimrod Knoller. I'm based out of Berlin. I started my career actually in the energy sector as well, AI and energy. I moved to blockchain about 4 or 5 years ago. I'm now the head of the Lava Foundation. Lava itself is an RPC ecosystem, decentralized RPC. But we have collaborations with projects in the form of sandboxes with different institutional or enterprise, traditional industry as well, companies. One of our sandboxes is with Michael around, again, the tokenization of energy.
Thanks, Nimrod. We will talk more about that later. And of course, you have to explain for all our guests from the energy sector what RPC means during this webinar, but we will get this done. Over to you, Thomas.
Yeah, thank you very much, Sebastian. Excited to be here today. I'm Thomas Brenner. I'm the CEO of Oli Systems. and basically we're working on connecting small and distributed energy assets to different energy markets using blockchain since 2017, 1 year after we were founded. So quite some time ago. So today I'll show you two use cases. One basically that has to do with digital identities of those assets and how we can sort of use them to more easily onboard small assets into TSO markets. Well, I'll tell you later what a TSO does for all of those who are not from the energy sector. And the second one that I'll be talking about is a system that allows you to charge your electricity at any charging point while bringing your own power. So basically, you can bring your own electricity contract using open charge network rather than conventional roaming providers. So that's sort of also where basically we'll have the blockchain come in at a, I would say, very technical level where usually end customers won't see it, but I'll try to show you a little bit of what it actually does here.
Yeah, that's of course one of the ambitions, to show how blockchain helps to run things like the projects Thomas was describing more efficiently and more sustainably. So we heard that some of you have been, let's say, transitioning over the past few years. So let's hear more about your projects so that the audience gets an idea who is working in which segment of the value chain and how partnerships could be struck. Jürgen, if you want to start.
Yeah, sure. Thank you. So as mentioned, we've been working with connecting machines to the economy and did so for also more for the energy sector. And one of our latest bigger project is the construction of a microgrid and so financing it and actually connecting it. And we faced various challenges during that. One is for investors to actually trust the investment and de-risk it. What does it mean? So usually if you invest into a battery, one part of the battery costs are the battery themselves, next to or besides the network or connectivity costs of the place. And all of those costs have a price tag, and it's not just cheap. And but batteries also degenerate, right? And or degrade. And it's important to run them within a certain boundary of capacity. And one of the aspects is to trust this, and we utilize our decentralized physical network to actually connect these devices and notarize the utilization, and thereby give trust to the investors and also real-time monitoring capabilities into the investments directly. The other aspect is financing. So financing one of these BESS or battery storage locations is pretty straight. However, if you want to scale this up and go from 10 to 100 assets, it's becoming much more difficult because usually investors or operators also do have the following challenges. One is getting a location where you're allowed to connect the battery storage system, right, the BESS, or the to the grid, right? This is difficult, and right now, most of the times you have to go into partnership with a local DSO, a network operator, a grid network operator, or others that own the site. And the other aspect is then how to let them participate in this, because it's also asset to get this connectivity, right? And this comes with some kind of SPVs or joint venture structures, and setting these things up every time it's time consuming, and coming up with a generic model for this is very appealing to larger players in order to scale and have this running, right? This is the second challenge. The third challenge is regulation in general, because it's one thing to want to use stable coins, for example, to invest in these aspects or other coins. The other is, what are the regulatory requirements for your SPV or your construct, right? Do you have to have an alternative investment form, a manager, and this comes with regulations. And then you can also put secures on top nowadays, but also this comes with another part of regulations and also more requirements to the overall timeline, right? But all of these are very interesting. One of the last ones to mention is the regulation on the energy side. So what do you have to fulfill in order to be able to construct such things? Well, these comes all in place, and that's what we learned over the last 2 years. Yeah. So what do we do here? So we built this kind of trust layer to actually connect energy hardware wallets and to give trust to all the operations, daily operations in the field, and also have done a mechanism to deploy the yields of the investments back to the investors and utilize stablecoins to do all of this, right? So we connect those machines connected to via our blockchain to the network and give the trust and transparency and operational visibility to investors, operators, and to the whole investment force, so to speak. The SPV itself. Initially, maybe we were a bit naive on how to start working on this, but we worked with banks together to come up with a model, and now have a lot of insights on how this can be operated. So as mentioned, you need to have the AIF compliance for the alternative investment fund and such a manager. And last but not least, initially we thought about crowd investment, investing these aspects, but I think the KYC process it's a large burden for the complete structure of such a crowd investment infrastructure, and needs to be solved and tackled. And that's what we currently investigate. If you have larger players investing, it's easier because the reduction of the KYC processes, the cost of them is reduced and thereby much more feasible. But these were all learnings that we had in the past, and I'm happy to discuss this later on, right? So just for the state being, we've been working with utilities right now and aggregators in order to connect our sites, and have been doing this for the last month, and looking forward to continue discussing these topics.
Thanks, Jürgen. And let's continue straight with Michael.
Thank you so much. Very exciting, Jürgen. This is, I think, a look into what the future of energy could be and look like. I myself am the founder of and CEO of two companies. One is Electric Blue. The other one is Ampex Blue. The first one, Electric Blue, is actually a direct marketing company, ein Direktvermarkter, as we would say in German. And Jürgen, you were just mentioning the aggregators. The direct marketing companies are aggregating solar and wind and battery assets and trading them on IPEX or selling the electricity to industrial customers. And this is actually what we are doing. Now, since 10 years, I founded the company in 2018, and we have now an increasing number of clients, and next year we aim to reach 1 gigawatt of installed capacity. So we are growing quite significantly. So this is one of the companies. Many clients of mine realized that trading is one thing, and it's quite lucrative to do the trading for the assets, but many PV and solar assets have realized that they need batteries. They need batteries. Why? Because prices during noon are normally close to €0, and you need batteries in order to shift the electricity to the evening hours. And the system as well needs these assets. Renewables are actually outpacing the grid's ability to absorb them. So the grid infrastructure needs at least 10 more years to be able to absorb the renewables. But there's a possibility to cope with this, and this is the battery storage. So battery storage is one of the chance to absorb the intermittency of the renewables. We have at the moment, I won't give too much numbers, but we have at the moment around 30 gigawatt hours of installed batteries. But according to Fraunhofer, it's around 170 gigawatt hours which are needed by 2030, which shows that there's a huge need for batteries on the German market and on the European market as well. Grid congestion is huge, and the cost for grid congestion is also huge. Redispatch, according to the Bundesnetzagentur, incurred costs of 2.7 billion euro in 2025, which shows you need batteries. You need one-way storage facilities, also Grünstromspeicher, but you also need two-way storage facilities, which we in German call Graustromspeicher. Both are needed, and they are needed now because the grid takes too long to absorb all those assets. Because the market needs these assets, the profitability of these assets is also quite high. Personally, I would say that this is the big chance for a lucrative investment into the German market. In my former positions as managing director of different companies, I was investing a huge amount of money into projects in Germany, but the investment in batteries, one-way and two-way storage facilities, to my mind, is in the last 20 years the best chance which I have seen so far, and I invite everybody to join the party. Thank you, Sebastian.
Thanks, Michael. So straightforward, we already jumped to the conclusion. In the meantime, Nimrod, do not only explain what RPC means for non-blockchainers, but also why and how you partnered with Michael to launch a testbed to drive financing into batteries. You're still muted, so you might want to open the mic.
Yeah. Thank you. So first of all, thanks for the kind of prep for the explanation. I'll quickly then go over what's an RPC. For those who don't know, RPC, it stands for Remote Protocol Call, and it's just the way to communicate in and out with the blockchain. Okay, it's in a way you can think of it as an API to the blockchain. Simply put, it's a bit more complicated than just an API because the way the blockchain function is you have multiple databases that are in, through the magic of blockchain, all are always aligned and in sync. And communicating with that and really getting the right data at the right time without any issues, it's a bit more tricky. So you have different third-party providers that give you that access in and out of the blockchain. And this is what Lava does in a decentralized way. We have a few of those providers, we aggregate them, and we route the requests according to their quality of service. What does this have to do with Michael and their project? Well, we have within our ecosystem and our users a lot of projects that do tokenization or do the different parts that one would need in order to tokenize and to move and move payments from around the world to different projects like that. Payment trails, we have tokenization platforms, DeFi platforms. And when I was put in touch with Michael, it seemed like there's a liquidity issue here. Right? Because the need was there, the storage facilities were in reach, everything was there, but there's a liquidity issue. And if there's one thing I think blockchain has proven to be good at is moving liquidity around very fast. Right? So we decided to work together to present essentially this business opportunity to our user base in Lava that we believe could help Michael both in tokenizing and then also getting the funds and moving them to set up these to build up these storage facilities. And I think there's also a very interesting kind of future-looking element of this as well, because once these assets will be tokenized, I think it's very interesting to see what you could do further beyond just the tokenization and investment in these. So I think there's a lot of very interesting business models that could be done here.
Thank you. So we see there are two different sides. One is the financing or pre-financing of assets, where tokenization as one of the, let's say, financial methods of applying blockchain can help. And then there's the operational efficiency side, where, for example, Jürgen is touching, but where also Thomas and Oli Systems come into play. So over to you, Thomas.
Yeah, thank you. I think now it's much easier for me because you've already been telling the audience quite a few things that also are important to what we do. So as Michael mentioned, right now keeping the grid stable is quite a costly issue, and we are tackling this issue from a slightly different perspective. We are looking at the small assets that are already in the system somehow. When you all know, people have a lot of private battery storage, there are electric vehicle chargers popping up at nearly every corner now. If you look closely, there are heat pumps coming into the system. And usually, I mean, what's the case for those is they're, of course, that's a classic sort of blockchain paradigm. They're decentrally built and operated and also decentrally owned, and usually not part of a centrally orchestrated system. So what is the consequence of this? Of course, they're usually also having at most one energy use case. So usually that's selling or using the self-generated electricity to a maximum degree. That's what basically the business model is about. What we're trying to do now is to unlock those assets, also to make them available to transmission grid operators, the TSOs I've been mentioning previously. So the idea is to bring those assets to the platforms that are already existing at transmission grid operators, but usually for larger assets like the ones Michael mentioned, or for even larger systems. And that's actually where also then right now the blockchain part comes in, because as you can guess, the sort of the administrative effort that you usually have to take in order to onboard like a small home battery or 11 kilowatt charger is larger than doing this for a properly pre-qualified large battery storage system that has only been built for actually this purpose, or for maybe one or two other use cases. So here we're trying to bring in, for example, digital identities of the asset to basically provide then the TSO with the necessary, or the aggregator in between with the necessary amount of data of a pool of small assets. So technically that means in the final version of this system that we've been working on actually since 2019, that basically each asset already comes with a sort of product passport, as you may call it, that gives information about, okay, what's the maximum power it can provide, what's the storage capacity, is it, for example, is it already registered with certain services that are provided, for example, to other than the transmission grid operators, so they can make sure that there's no double marketing happening here. So this is something that we've been working on, as I said, now for almost 7 years, and now this year within the DataFlex project, which is a larger venture of all the major TSOs in Germany and a couple of also big companies, we've been demonstrating that basically we can hook such a pool, we can directly hook up to their existing platforms. So basically we can mimic larger assets by using smaller assets that have never actually been purchased for basically providing stability services to the grid, but now they can. And basically, so we're helping twofold. In one, basically on the asset owner side, we're providing an additional value chain, whereas on the demand side for the transmission grid operators, you provide them with simply more flexibility that they can use to keep the grid stable. And as Michael mentioned, there's quite a bit of demand here. I remember still when we started doing this, the TSOs were like, okay, why are you dealing with these small assets? And last year, basically, I think there was a panel also when a speaker from TransnetBW here, the local TSO in the south, basically he was asked like on a basically on a scale from 1 to 5, how important are those small flexibilities to you? And basically his answer was 6. So they started recognizing that it's simply not wise, also from an economic perspective, to ignore the assets that are basically already in the system. They have been financed, they are existing. They may not have a primary purpose of serving the grid in one way or the other, but they can still be utilized to do so. That's the one thing. The second thing where we've been using blockchain also already now in a productive environment, and I think that's sort of, again, as I mentioned, comes to the end customer as a very boring thing because you don't see it at all, is when people now are allowed to bring their own electricity contracts to charge points. The first case where this is mandatory is the newly built stations on German motorways for e-trucks. So there's now a tender, big tender that had just been closed, closure was a few months ago, but the actual outcome was published like 3 weeks ago or so, where it's about like building those large charging stations for trucks. And basically one requirement is, okay, logistics companies can bring their own power to lower the costs of electricity, especially for those who drive large stints on the motorway. So and of course now the idea is, why would you use blockchain to do this? There's conventional roaming providers already existing out there, but also the government basically saw that usually the point is that the costs usually coming with decentralized roaming platforms are way beyond what is needed in order to drive adoption of large e-trucks and e-truck fleets in Germany. So basically they were looking for alternative solutions, and the one we've built actually is based on Open Charge Network, which then helps basically to use, in this case, a distributed blockchain layer to facilitate those charging events. So basically what it's doing is very sort of low key. It's bringing, it's acting as a data hub. So it's bringing basically charging information, electricity provider information, grid information to the right parties. So it's managing the necessary data flows in order to facilitate this. And that's basically, again, it's the super boring case, I would say, in a sense that it's the end customer doesn't see this at all. But it's, I think, a nice example where blockchain in the EV charging domain is already productive and it's working, and it's also actually already showing that costs can be quite a bit lower than what conventional roaming providers charges.
Perfect. Thank you, Thomas. Yeah, I think it's more a normal thing in the modern world that end customers don't see and understand everything. Nevertheless, it can be quite important. And I liked your quote about the colleague from Tenet / ENBW about the importance of the distributed assets that are feeding in energy into the grid. Let's try to summarize maybe some of the things you said also about the historical evolution of your businesses. Thomas, we met, I think, in 2017-18 when still, there were publicly funded projects to, let's say, play around with the infrastructure for the energy transition. Now, 7-8 years later, where are we? You mentioned DataFlex, which is still a publicly funded project by the German state. But would you say it's much more advanced today and closer to production, or how is the public funding still helping the transition here?
Yeah, good point. I think, yeah, I remember also 17 started out pretty wild, like you trying to use Ethereum for recording energy data on a blockchain. I think on one hand, these publicly funded projects still help drive confidence that these decentralized systems can provide added value. So this is still something that's, I think, needed. I don't think it's the fundamental stuff that's needed still, but what's needed is to be to show that these things can scale properly. But on the other hand, as I said, like what we now see is that certain, I would still call them niche applications, already prove to be productive. So we, on one hand, we still see, like as I said, like the digital identities of assets, which one way or the other works, right? But is still not at a stage where I would say every heat pump supplier or every large battery household battery supplier would incorporate this. So there's still some way to go here. But again, on the side where it's a fully B2B thing and where also the regulation is not sensitive to the way you do it, but in the end, as in this case with the bring your own power model, only the outcome was defined, right? Basically, they said we need a system that allows you to bring your own electricity contract. However, how the way you do it basically doesn't matter. And I think those are very promising because again, the maturity of the tech is there, and I think again to overcome this resistance of like, oh, they're using blockchain in a productive system. That's usually most easily done if you're not like coming in as the main sort of as the main value proposition, but you should simply show that you can do things better and cheaper than conventional systems can.
Sure, thank you. Jürgen, you talked about regulation earlier. Has it helped a lot that we now have regulation of blockchain tech and digital assets in the finance markets? Because, you know, finance markets are, of course, heavily regulated. So has this added to the credibility of, let's say, blockchain tech as a solution?
Yeah, I think it helps to define trust and give some guardrails. I mean, compared to 2018, which was more like the Wild Wild West, we now have MiCA. There's also the DLT pilot regime to help and use securities tokens and trade them amongst others. And there on the hardware side, there's also like the Cyber Resilience Act, which also gives you a compliance framework for connected devices on the energy market and for critical infrastructure, right? And I think all of these are very important in order to drive a more secure infrastructure and also help to connect machines to the economy, which wasn't that well defined before, right? And but at the same time, I think it's also a mode being defined, because if you're now a startup and want to go that way, it's much more difficult to become compliant to all those regulations, right? However, if you want through it, it's also a mode that helps you and protects you a bit. Right? So as mentioned, with all those regulations, I think for investors, just to you have to go through KYC through the different platforms. If you're a private person, KYC might be super easy and straight. But if you do have an investment portfolio already in place, this is getting much more complex and much more expensive for all the parties, so to speak. Yeah? And I think that these are the pros and cons of regulation. But I think there are. I think for investors, it's much more secure, right? For example, for SPV definition, so to speak, I think the KYC process is a bit blocking or hindering, as this is time-consuming and also consuming a lot of funds that you might acquire.
A question to both Michael and Nimrod. You mentioned, Nimrod, the liquidity or financing gap that we have here to install the much needed battery hardware assets, at least more quickly. Where do we stand here? Because if we look at financial markets, yes, banks are earning money again with just traditional interest rates. While on the blockchain side, I think blockchain network and their treasury assets will have to look for good use cases, investment use cases in this cycle. We're currently in the blockchain winter or bear market, if you want. We have this 4-year cycle, which drives us all mad, but it's still a bit of a reality. And I guess, Michael, alternative hardware assets and financing of this is still not bankable because it's a short-term, let's say, opportunity of a few years, and and banks might not have the understanding or the processes to tackle this. It was similar when it came to Bitcoin mining, also a category that was not covered by banks and where alternative private investments played a big role. So where are we now? Is the current state of the capital market helping to fill this kind of gap also with tokenization? Or is the cyclical nature of blockchain helping? What's your gut feeling about this investment opportunity you were describing?
Nimrod, shall I start? You can start.
No, yeah. Say, Michael, do you want to start and I can pick up the word blockchain?
Yeah. I can describe the situation as it is, actually. So there are banks, actually, who finance battery projects because it is known that the profitability, at least at the moment, is high and very high. Why? Because the spreads on the energy market, they are quite high. But the problem is, as an investor and as an owner of the asset, you want to run the asset merchant. So you want to trade the electricity on the markets and don't want to sign a tolling agreement. If you do that, you don't earn as much as you could. And banks, they want security. So why do they finance wind and PV farms? Because there is an EEG. There's a state subsidy, and the income flows are secured. This is not the case with batteries, and this is why financing with banks is largely complicated, very expensive, or partially not even possible. So this is where other financial investors, so other markets are needed. And this is where the blockchain and digital ownerships may come in. This is why we have opened, together with the Lava Foundation, together with Nimrod, the sandbox, and where we are hoping to find other investors who are willing to seize this huge opportunity, which I see in the market. Nimrod, maybe I hand over to you.
Yeah. So regarding the opportunities that we see from the blockchain space, and I can speak about the different projects that already applied to the sandbox and the models they're talking about, because again, we do RPCs. We see some very interesting models. So one approach is looking just as blockchain as DLT rails, distributed ledger technology rails, just a way to move money and information cross-border in a very easy way. That's it. Nothing too fancy. If you want to do KYC on someone from Southeast Asia and move his, the information and then the funds to Europe in a very easy way, that could be a solution. And we see some people looking at that, or some teams and projects having that angle. Another angle is more. We talked about banks and stuff like that. Another angle is more asset management approach from the blockchain space. Today, as kind of blockchain matures, and I think that comes a bit also with the regulations we spoke about and the history of the ecosystem, we see, for example, a lot of asset managers that give you a yield on stable coins, right? Usually it's quite low. It's 2-3%, maybe 4% on stable coins. That yield comes from somewhere, and that yield needs to come from yield-bearing assets, essentially, right? And there's only limited amount of assets they can work with these projects, and some of them are looking at these assets as well as another kind of source of yield. Right? So we see different approaches. Some of these are focused more for treasuries, for, as you said, foundations that are also looking for more stable assets. Now that they're less bullish on different tokens and projects that are kind of coming up and will give them crazy returns. They're looking for more stable assets. Some are just people that private individuals that hold a lot of their financial assets in in crypto is because they grew up within this industry, and that's where they're comfortable holding financial assets. So we see models kind of addressing all these different angles, and I think it's very interesting to see, how that will can turn out in the end.
Perfect. Jürgen, you wanted to add?
Yeah, sure. Thank you. We've been proposing or try to attract people from the DLT space since roughly 1 year to invest into batteries, right? For example, initially we thought like Bitcoin as to label it more green or invest into green energy in order to have much higher returns, right, instead of just hodling. And the problem that, from my point of view, was besides that there was back then still some regulatory uncertainties, is a bit the complexity of the product, right? Because if you just tell people, so this is my personal perception, right? But if you tell people, oh yeah, the energy market, they have a lot of high returns, and we can connect your investment indirectly to those returns of the energy market, and we will still be able to have a high yield, right? This is rather a high promise, which is very abstract for people from the DLT space that they don't understand, right? Or don't directly understand, and they're reluctant to invest initially, right? So I mean, I like the idea a lot, and I'm all in, right? At the same time, to connect to those markets is very difficult because those being participating in the energy market, they've been segregated for the last century, so to speak, right? It's not an open market. It's not transparent how those different, I mean, the energy market is not just one market. These are different markets with different regulations, different criteria, different playing rules, right, or conditions. And this is, it's, from my point of view, not so easy to package into a selling product to just invest and get high yield returns depending on the market performance.
But at the same time, remember, Jürgen, when we still worked together in 2020, we also tokenized Austria's largest solar park, back then without financial regulation, a voucher system. And people were just buying into sun packages if they didn't have, let's say, real estate or a roof to install their own solar. This was done by Wien Energy, so Austria's largest state-owned utility company, as a, let's say, traditional advertising campaign with billboards. And we brought them 2,000 new shareholders that became temporary shareholders for 5 years within 2 days. So, I fully agree to the sentence that people don't need to necessarily understand the details of what's underneath. But in this case, we were appealing, I guess, to people that wanted to support the energy transition without having the needs or the real estate to do it. So this was a good case. But I also see what you or hear what you said about the complexity. You have to go into the nitty-gritty of the market. Maybe, Michael, before we switch back to Nimrod, you mentioned the two-way Graubatteriespeicher case. And of course, there are lots of regulations and rules in the energy market. Can you quickly explain why there's a special opportunity here now until the end of the year?
Yes, perfectly. You're totally right. If if two-way storage facilities are starting being built until year end, there is a grid exemption for these two-way storage facilities. This is quite significant because if those assets would pay grid fees, they would earn 10% less to what they earn if the exemption is being made use of. So to put it simple, if you start building your battery until year end, you can make use of the grid exemption with the effect that the profitability of these two-way storage facilities is actually significantly higher than if you start building those assets later, meaning only next year. So it would be great to get the investors onboarded still this year. That would be nice, because then there's the grid exemption.
And this grid fee exemption, is it for 1 year? Is it for lifetime?
Good point. Yes, it's for 20 years. So meaning that these assets actually throughout their lifetime are making a significant higher profit than those who are being built only next year. More in technical terms, the FID needs to be before a year end. So the final investment decision, according to what the Bundesnetzagentur says. And there are many details to that, but basically it is you need to start building the asset still this year.
Yeah, but it's very important, especially if you want to gamify a business model and make it really attractive. Of course, those exemptions and or new regulation that just frees up some of the capital is very welcome. Nimrod, you wanted to add? You raised your hand.
Yes, I just wanted to touch to Jürgen's point, which is a very good one, the complexity of kind of bridging the markets, the DLT world and the energy world. And I think, what we see, and I think it's more of a result of a maturing, the maturing of the blockchain space, is people or teams that are specializing in a particular use case or a particular audience, right? So again, like some teams are really they're focused on the retail side, some teams are asset managers, and one of the things that we see, I think more maybe because we are in, as you said, crypto winter or bear market, is also the teams are kind of doubling down on their specialization rather than in a bull market. In the markets, whatever you do just goes up. Everybody kind of gets lost a bit. In the bear market, people kind of tend to focus. First of all, they have to do it because they can't afford so many people in their teams to just throw money at everything, and then they have to realistically focus on some niches. And that's I think some of the interesting cases that we see in the conversations that we're having with the different teams is we see them focusing and they have, I remember crypto 2-3 years ago, you'd ask someone who's your audience or your client or whatever, and it's everybody. Which everybody's a different word to say nobody. Where now it's they really know who they're looking at. So
okay,
we see this specialization and this bridging.
Fair point.
Yeah.
Before I want to ask something to Thomas, Jürgen, you had a brief comment?
Yeah, a brief comment. Yeah, and I think that's true that they're specialized, right? But my point or my answer for this or my perception is more like, people in the DeFi space, they tend to work, investment, non-investment, they work with the charts. And at the same time, in the energy market, there's the same going on the market prices, right? So, and so as they tend to see that the trading on the energy market is also done, right? They have to believe that the aggregators take over this work, right? Which is essentially their own work, right? So I think investing in something where other traders trade on a different market where they don't have to exit themselves, it feels like there's a mode, right? And just connecting the example that Sebastian mentioned, I think with PV investments, it's straight because you get investment from the energy that you had, right, or for back with this crowdfunding initiative. But for those batteries, I think you need a much higher volume, right, for the investment. And this volume is so much higher that my feeling it's a bit more difficult to establish this trust, right? Because of the ROI is not that well defined.
Yeah, but at the same time,
in perception.
at the same time, of course, tokenization allows you to slice investment into smaller bits and pieces. So the narrative seems to be important. Thomas, one of the questions I have for you, I just talked to a large German industrial corporation last week, and they said, yeah, well, we had some decentralization trials also in energy markets, but now some of the managers are doubting it, and they think that centralized control over certain market segments might be more efficient. So where are we in the market? Is there still this, let's say, very different view on the market between, let's say, conservative people that might also have an engineering or a framing history that allows them to believe in centralized control only? Or has it been proven? You mentioned that, also the perception of the TSOs and DSOs shifted to a certain degree. Where are we? Because these narratives are also very important if we think about the political decisions that we see now. We don't want a government that comes in to change the rhythm and the direction of a market every 4 years. So where are we between conservative and progressive thinkers?
Yeah, a very good question, I guess. And I think that I've been doing this now for also almost 15 years. And basically what I see is that these things, or the whole discussion sort of hybridizes. I think the hardcore centralists start to accept that centralized only doesn't work. Like if we just followed the discussion on the gas-fired power plants here in Germany, right? I mean, this is sort of where you would assume that this is the classic centralized approach coming in. But I would say even if you ask in the Ministry of Economics, they see that this is not the only solution to it, right? That we need this mixture of large batteries, small assets, and maybe some centralized assets that are part of the system. So I would say it's neither the all centralized world that we may have, or that was maybe a vision of some like 10 years ago when this whole thing kicked off, nor that you have the whole centralized world coming back. It's more like what I see is that can you manage the complexity of the decentralized world in a way that it's accessible to those players like TSOs or also DSOs, right? I mean, they have not been either trained to deal with decentralized assets, or at some, especially distribution grid operators, almost never had to. I mean, was one question also coming, they had basically paragraph 14a, which allowed them to switch off assets when there was a critical situation, but that's all they had. This was a top-down instrument that they had in order to keep their grid stable. Now these things are, again, it's about like, how can I make those assets more accessible to them and do something more intelligent than just sort of switching things off when a situation gets critical. Because I think some of you mentioned this already. If we see increasing PV peaks, especially during like Pentecost holidays or 1st of May, it simply doesn't help if you just switch off centralized assets. You need to activate flexibilities on a large scale, small and large, in order to get there. And I think most people have understood this by now, that it's in the end, it's going to be a mixture. Again, still to be discussed what the mixture will look like.
Yeah. One of our, let's say, parts of our mission as the German Blockchain Association is also to educate the public about how blockchain and AI can or should work together. Blockchain more as a backend technology that notarizes and automates certain aspects of AI usage, especially in critical infrastructure. Do you think that the emergence of AI and also this possibility of coupling AI and blockchain and create something like a Siamese twin for industrial, let's say, future architecture, will it help to increase the belief in decentralized operational capabilities? Or what's your perception if you compare projects?
I think we've been starting on working with back then still called reinforcement learning in 2019 on solving basically the problem, where do I market my asset? To keep it very simple, like you assume you have different options. There's margin trading, there's self-consumption, there is TSO services, there may be DSO services. So how do you decide where the biggest benefit for the asset owner goes to? So, and I think this is where I can really leverage things, because this is a complex optimization problem that you don't solve by clicking buttons or having simple algorithms, especially if you have assets that are not only there for the energy sector, but the heat pumps still need to heat up the building, or a car still need to drive around. So you have a lot of boundary conditions to cope with. And in order to then document and validate all those data from these assets, I think this is where blockchain can definitely help, because this is to have a complete sort of overview on what's happening. Right? This is extremely hard to do if you do this in a conventional centralized way. And I don't think also it's getting you there, because in the end, what's interesting are those events where you may have doubt that, for example, an asset has provided a certain service. And this is again where the blockchain comes in.
Yeah. And a follow-up question to you, since you work with those large DSOs and TSOs in your projects, the whole cybersecurity dimension to it. We see attacks on grid infrastructure. We had the big outage in Spain. When was it? 2 years ago. And now the terrorist attacks in Germany. Is this also increasing the awareness that we need, let's say, proof of assets and proof of where data and certain measurements are coming from? Is this helping as well?
I mean, as you say, the awareness has clearly gone up. I think also the need for more transparency, especially at the distribution grid level, has clearly gone up. I mean, looking at where a lot of still small DSOs in Germany, where they come from in terms of transparency and visibility of what's going on, I think that's one thing. And the other thing is, I would still say, I mean, I may sound a bit skeptical on this, but right now, I think the people responsible for this kind of issues at DSOs especially, they don't really care what tech does the job. So in the end, for them, it's like, okay, maybe I need some more data on my infrastructure, on my feeders, on my transmission lines, maybe on the larger ones. But in the end, as long as you can keep the promise and give them what they need, I would neither say that blockchain is a showstopper, nor it's actually helping adoption. So they're pretty neutral to that.
Okay. And one question to you, Jürgen. If we talk about future business models, you also managed an energy community in Austria as a pilot project over a couple of years. So what has worked there, and what are your learnings? Did you gamify it locally, or was it more the, let's say, oral history and the direct talks between the inhabitants of that village that helped to, let's say, form new models? What's your learning?
So one learning, without a battery, energy sharing community can't be profitable, right? And then also using this battery to connect it to the market, right, to the energy markets. I think, like, I wouldn't call it gamification, just to go back with AI also. It's like the energy providers, they want not just probabilistic, but deterministic decisions and quick responses on those markets. But for the, I think tokenization helps with regards to when something is, well, liquid, right? So for example, usually, so the scheme in Austria for the energy community is at the end of the month or a bit later, they get paid what they supply to the network, right? So, but in our case, when we measure all the participants, the consumption, the production, we know at this point in time the actual productivity and what everyone has or will earn in the future, right? Because there is a certain aspect of what they get paid by the community or by the market. And knowing that, we can utilize those tokens, right, and use them in the local community and have a local token to actually, well, connect the people locally, right, but also use it as a payment token or a voucher within the community to actually well, pay and leverage these values early on, not just 6 weeks later. So that's what we currently built with one of the communities that we had. We have a research project with them going on, but I think this can also be done in other markets where there is, a difference between when you get the actual payments, but also we already had delivered the work, so it's a voucher for the future that you can then utilize for other payment systems or within the community or within a segregated market.
Okay, perfect. So before we wrap it up, maybe a question to all of you. If it would be almost Christmas now and you could write a wish list for Christmas, what would be on it? What is your wish? How could the state or also the private economy make quicker progress towards not only the energy transition as such, but to these use cases that we discussed today? Yes, of course, financing is clear. So Michael, you made your call to action already, but maybe you have also something else on your wish list.
I need to think about it. It would be fascinating, actually, if we were able to have a secondary market for these battery assets which are needed for the German market. If that would happen, and actually I would love it. So if the decentralized world of the energy market is also mirrored by a decentralized ownership of residentials and smaller market participants.
Okay, that's a good wish. Thomas, what's the wish from Stuttgart?
Yeah, I thought about this for a second. I think I have a very generic wish in one way. I mean, I think we've seen, especially with the whole smart meter discussion in Germany, that regulation that defines requirements at the very sort of bottom level doesn't work. So what I would wish for is a regulation in general, also for all our cases, that rather is oriented at the output of what the regulator wants rather than how it's exactly done, because that's the cases where we have seen that adoption, especially of the stuff we work on, actually works, because in the end it's about, like, can you provide the added value or not? So what I would wish for is really a regulation that rather looks at, okay, what do I want to achieve, and maybe also corrects this during the process, rather than saying, okay, I want every protocol to be defined at the very beginning, and it has to be like compliant to like all potential edge cases that I may envision, because that's basically just killing innovation in especially in this sector.
Okay, perfect. And before we take Timothy's question, what's on the wish list for Santa Claus if you're an RPC network, Nimrod? Again, the mic, yeah.
Yeah, it's a good question. I mean, I think if you it's well covered by both Thomas and Michael, right? So both the regulatory side and the kind of outcome side. I think I would maybe add on top of Thomas, maybe a better communication with the regulator that would help us to support in this kind of process, or have better input from the industry. And on Michael, I'd also like to see not only a secondary market, but a DeFi also really picking up RWAs and assets like that as well.
Okay, perfect. We have a question from Timothy. You raised your hand. If you could unmute yourself and then shoot, please.
It's not a question. On my wish list for Christmas would be
okay.
to stop all the subsidiaries that are valid in the energy market. So since Germany was founded, the energy market was always influenced by subsidiaries. No matter where you look at coal, nuclear technology, wind, solar, even now the H2 technology. So, and we never had a really competition in the energy market because of these kind of subsidiaries. So that would be my wish.
Okay, yeah, I'm not sure if it will come true because, as a lobby organization myself or ourselves, no, but it's certainly it makes a lot of sense. But we shouldn't forget, and I talk about this on many occasions, we were coming out of an era where, let's say, things were proceeding as normal and where subsidies, I agree, were sometimes just, distorting, let's say, market evolution. But now we enter a phase where everything is really highly political. And sometimes, in the future, a subsidy or a counter tariff or some measures might make sense because right now foul play is more the norm at the international level compared to fair playing. And of course, a functioning market needs a fair and unhindered environment. So I don't think this will be the global reality, at least for the next few years. But let's see. Let's keep our fingers crossed. Of course, we should add world peace to our wish list, since we also have an international panel here. And if we think about energy, let's say securing energy for the needs that we have in Europe and that other regions need, we need more international collaboration. So I like Nimrod's example about quickly onboarding investors from Asia, for example, through stablecoins. But we will also see energy communities becoming global in the near future because once energy is on the grid, it could also, at least in theory, travel. We will also see, hopefully, an abundance of produced energy soon. So distribution will remain key. And one thing is clear, we need efficient distribution to bring energy from where it's produced to where it's needed. When I started my journey into the energy markets, we were still discussing desert tech at the end of the noughties. And I remember discussing a tokenization project in the Ukraine in 2020. And unfortunately, we didn't turn it around because the political insecurities were so high at the time. And we said it might not be a good idea to start tokenization, and then a war starts and the whole project goes bust. And we know how sticky reputation can sometimes be. Back to Jürgen. You still had a last wish.
Yeah, I also want to highlight or mention my wish list, right? So I think with all the regulations in place, it's still tricky to build up need SPV to invest into batteries, right, with crypto. And I think the idea is very appealing to me, and I'd like to also wish to connect it to the security market, because then the liquidity would also inflate, and I think this could support Michael's vision much more, and yeah, that's my wish to get this through, right?
Okay, perfect. Then let's wrap it up. What have we learned today? We see progress in the adoption of blockchain tech, not only in the financial market, of course, the realities in the energy markets, the realities and progress coming from the financial markets are, let's say, supporting in the sense that more tooling is available, but also more credibility, also coming from regulation. So regulation is not only hindering innovation, it's sometimes also providing a good leveled playing field. We talked about the at least short-term, but also midterm opportunity to make good investments in batteries that are then used to drive the optimization of renewable energy assets. This opportunity will not go away quickly, so I expect it to be around for at least the next 2 years. Michael mentioned the special conditions that apply now. So there's a clear call to action. You can discuss with the people on the panel about this opportunity. If you have additional suggestions for a next panel discussing details of the energy market or sector coupling and efficiency in general, you can approach us as the German Blockchain Association. We're happy to facilitate those discussions. And I also take the advice of Nimrod. We will run it past the regulator BaFin in Germany, because if we want to achieve efficient sector coupling, we also need to make people talk to each other, and that will be a good opportunity, because if we think about the future of money, I'm sometimes wondering when these different money layers that we have, where they will, let's say, meet in the end. We have new forms of money coming up. We have carbon credits. Bitcoin is basically a monetary form of energy, if we look at it from a distance. So it will be interesting to see these monetary systems coming together and hopefully driving, let's say, progress for society. So thanks to everybody on the panel today. We will make this available as a recording through our YouTube channel and also distribute it via social media. So looking forward to talk to some of you soon and see more of you hopefully next time. Bye.